Hi guys, welcome back. So, the news about China's cybersecurity regulator ordering Didi to remove from the App Store. It's all over the weekend, brewing all over across the sites, and a lot of people are speculating and kind of guessing what's happening. And of course, after a few days of speculating, Didi right away opened with a huge gap down below and continue remaining low price point, dropping near 20%. But not only Didi, in fact, the whole Chinese stocks sector in the US stock market were all like a bloodbath. China concept stocks dropped 4.4%. The kind of fall like a few months ago when the market was in a lot of fear mode. Many Chinese stocks were gapping down below and continue going down further, except for Luckin, of course, and some strong sector like solar and blockchain. Another recent IPO was also part of the investigation, ticker symbol BZ. It is one of the holdings of ARK Invest as well, and today it dropped near 16%. So right now I think a lot of investors are getting quite frustrated, more than fearful. I think the fear stage has passed, and right now it's more frustration over Chinese stocks. And this is no surprising. I always say that Chinese stocks are full of drama, a lot of black swan news from in and out of the country, sometimes from the US, sometimes from the Chinese government. So this is something we should be prepared for when we invested in Chinese stocks. And I have a lot of questions or comments asking what to do about Didi and also other Chinese stocks, because obviously right now it's not just affecting Didi but also most of the other Chinese stocks. So in this video I want to talk about what I think about the Didi situation and also what is going on with Chinese stocks with all the crackdown from the Chinese government. Why are they driving down the share price of the Chinese stocks so often with all the crackdown recently? And also, does that mean they don't care about the companies listed in US or US investors? Let's talk about this. First of all, about Didi. Now, if you remember what I shared in my last video about Didi before the IPO, I list out the pros and cons about this investment. And I specifically said that I was afraid the water is too deep. The company still gives me a lot of uncertainties. The whole IPO being in a rush and with a big discount seemed a little suspicious. So I said I would stay out of it at least for the time being. And 2 days after the IPO, this news happened, and it just confirms my concern on how deep the water is behind Didi. First of all, Didi must be holding a lot of the sensitive data. For example, all the mapping information with high precision, and also important information must be lying within the roots of many critical people in China over the past few years. There must be some important history of that, important dates, important time recorded within their data. That's what I assume, and it makes sense to me. And therefore, that's why rumors said that a few weeks before the IPO, the Chinese government had expressed the concern of this IPO regarding to the safety of the data they have collected, and also wanted the company to run a full investigation first on the way they collect data. So I would assume they either hope Didi would postpone the IPO or just choose to be public within China or Hong Kong market. But as I shared last time, I think Didi is under a lot of pressure from the investors as they have invested so much money in the past, and they might have some urgency for exit because there are so many institutions involved behind. So at least part of the group have been waiting to exit for a while. Especially we don't see where's the end until we see positive profit. So instead of doing what was told, I think Didi chose to rush to IPO. They went ahead, and also they had taken advantage of the 100-year anniversary because one, everyone's attention is on this big event while they are rushing to IPO with low profile And two, it's very unlikely to have bad news or black swan before the 100-year event. So it seems like they took advantage of this. And of course, it would backfire right after the 100-year event is finished, because like we all expected, there will be no bad news or no crashing before and during the 100-year event. So that is why they were ordered to be removed from the App Store right after this is finished. So that would mean new users cannot download the app and they cannot register for new users. Now, if you use the WeChat, you should know there is something that's called the mini programs, which is like the app within the WeChat app. So then you don't have to install a certain app in order to use it on your phone, but you can also access it through WeChat. So that means even though Didi is off the rack on App Store, you can still access through WeChat, and everybody in China use WeChat anyways. And also, they have already had 400 to 500 million users on the app register, and at this stage, they're not in the phase of getting a lot of new registered users anymore. So new users only accounts for very small parts of their business. So this news or the action from the CAC is not as bad as it looks for the business, but it does send a very clear and serious message. So right now it does look like there is some conflict behind the scenes that we don't seem to be able to figure out yet, and it's clearly sending out a message. On top of that, Didi is holding these important and massive data they collected. While the biggest investors behind, the top two are SoftBank and Uber. Both are not Chinese, and there's also Apple. Again, US background. So I can see why the government is being so careful and cautious on this IPO. So with these reasonings I mentioned above, I think right now it's best to stay out of the cloud we are seeing and wait for the dust to settle a little more before thinking of picking up bargain. Besides, right now I still find it difficult to give a fair valuation to Didi because of the pros and cons I mentioned in my previous video about Didi. In terms of the share price, it did bounce off a little bit since the open or bottom of the day. I think a lot of people were trying to pick up a bargain and catch a rebound, and there might be chance for that. But I would think it's safer maybe to take profit at some rebound or set stop loss with the lowest of the day, like 11.5, so you don't lose more if it continue dipping further or more news coming out, and very likely to happen. So next is why is China pressuring all the tech companies one after the other and driving down a lot of the share price of Chinese stocks? Do they really not care about the share price of these Chinese companies? And do they really do that because they don't care about US investors or international investors? I have thinking recently, I have put quite some thoughts in these few days about this matter, and I want to share my opinion about that because something doesn't add up. It doesn't make any sense for the government to want their companies to fail all the share price to be diving like this. It doesn't even help the reputation of the country like this. So I think there's gotta be much deeper reasoning behind the scene, and I'm trying to figure it out. And of course, no one can understand completely unless you are an insider. So I'll just share what I think. First is the control. In the last decade, a lot of the Chinese big techs had been growing rapidly, very well, because the Chinese government gave them a lot of the easing off, letting them grow in more of a free manner to try to encourage and speed up all of these new technology, the internet platforms. Until recently, especially with what happened with the Ant Group's IPO, they realized that these big tech companies had been growing quite large and powerful, getting a little bit out of control. So with what's happening recently for the last few months, it's like the government is trying to gain back some control over these giant companies they have grown to over the past years. So then the power is not too centralized. And next, it would be driven by the war of tech that started by the US, and war of tech in this case for Didi would be the war of data. And it's really not just Didi that's holding massive data. A lot of the tech giants have, like Tencent and Alibaba Alibaba, and they also happen to be mainly invested by foreign companies. Most of the shareholders of Tencent and Alibaba are not Chinese. So, with what happened with Alibaba and the others for the anti-probe, it would be more domestic issue within the country, but this time with Didi and possibly later on extending to more companies about the collect or use of data would be more geopolitical issues relating to the war of tech. Maybe Didi, it's only the beginning of the whole thing before it extends to other companies and other countries. US could be doing this later if there is company holding too much sensitive data through the collection over the years. The next reason would be to try to cool off from a heated stock market or sector, because before all of the Chinese techs were growing quite well, quite strong for over a period of time, and there is a possibility that the government sees heat and try to cool off with this timing, and especially if they see that the US stock market is making all-time high almost every day, and they might think of purposely cooling off a little to avoid potential systematic risk. And it was about 2 months ago. Let's not forget the potential China investment ban that President Biden might put towards a lot of Chinese investment. And because right now a lot of the US organizations are investing into Chinese stocks. So if this really happens, that the US organizations need to pull out of all of this investment, imagine the sell-off it can create. So it's possible that the Chinese government is preparing for this just in case they pull the trigger to reduce the potential risk of that happening. So with the black swan news one after the other, it might actually be the process of the investment proportion changing from the bigger US proportion into bigger Chinese proportion, meaning the investment behind the companies would be more taken by Chinese institutions, Chinese capital. Foreign investors getting frustrated with all the drama, Chinese capital get inside after the things settle down to pick up the bargain at the basement prices, like a transition for the shares to be moved from one hand to the other to reduce the potential threat. Next is to let all the bad news out all at once, and this would be good for a better run in the future. To kind of let things bottom, as we see right now, a lot of the big techs are forming a good base for quite some time, consolidating or lying down on the floor. And the more solid bottom it forms, the better run it can have in the future. So it's better to let all the bad news come out first. And finally, I think they also want to have more independent financial market for the Chinese and Hong Kong market, meaning less dependence on the US market. Right now, the US market is running on full turbo recently. S&P 500 grew quite a bit this year, and a lot of the other markets have been following the US market. We all know that the US market, it's the driving force for all the financial market basically in the world. Everyone follows that, except right now, while the US stock market keeps growing, the Chinese stock market completely go on its own manner because of all the news driven recently. So I think there might be a possibility that they purposely want this divergence to let the Chinese market be more detached and independent from the US market. When the US side is growing, the Chinese side is getting into a pullback or correction. So then when the US side get into correction, the Chinese side would be less damage for that because it's already been through a long correction. Because it's already been through a lot of the bad news has been corrected. As I always thought, they want to grow the Chinese financial market to be more outstanding in the world, more important, and gain more international exposure. It's not very obvious right now, but wait until the day all the time when a lot of the stock markets, it's getting into correction together, and while the Chinese stock market is more stabilized, it might catch more attention from international investors. But that is just all my own thinking, because it just doesn't make sense to me that the Chinese government doesn't want the Chinese companies to succeed or don't care about the reputation of Chinese stocks in the world. It doesn't make sense. So I am still quite bullish in the Chinese stock market and still hold my bull thesis on that, expecting a long bull run in the future. And I think when the market sentiment is fearful or frustrated and our favorite stocks just keep dipping only because of the sentiment, not because of the fundamental, it might be a good chance to buy the dip. So that is my point of view for what happened with Didi and the reasoning behind all the Chinese government crackdown recently. Please let me know what you think in the comment section. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.